gotta call out the people who are just plain wrong. And that's what I'm going to do today. We're going to be calling out Ben Armstrong over at BitBoy Crypto, who I like, and we're going to call out a more perfect union, who I do not like, also Lark Davis, and maybe a few others. I got a lot to say here today, so brace yourself. You are about to enter a no bear zone. Shut the FUD up starts right now. And on today's episode of How to Be a Professional YouTuber, don't use a VPN while you're streaming, or if you are, get a better one than Surfshark, because that causes all the technical difficulties for today. Anywho, got a lot to cover here today, so let's get into the main things that we care about the most. Well, hey there, Tam Tam. Nice to see my number one cheerleader is already here. So, taking a look at the typical metrics that I like to look at. Let's start with how the market is going. Since the rate cut, we have been retracing and retracing hard. Guys, what I wanted to say, and I've been wanting to tell everybody, is September is a hard month for a reason. Just because we got a rate cut, that doesn't mean we're going to start pumping into all the way up to the moon. No, that doesn't happen in September when you got so much economic uncertainty. There's still a ton of reports that are yet to come out. I think there's one coming out next week about the labor market. So don't think that just because the rate cut occurred, that means we start pumping, or just because they told us at the meeting that there's going to be 2 more this year. And I got a lot more to say about the rate cut, which we'll be covering today. What about the assets that we really care about? The RH ecosystem. Not doing so hot today either, because it's in line with the rest of the market. If the rest of the market's down, there's no reason we should expect our assets to be up, because in a market like we got right now, nothing is decorrelated. The only thing that's really decorrelated here is we see EHEX is doing well compared to the Pulsechain ecosystem. And that, there's a good reason for that. I'll get into that a little bit later. But guys, you're not going to get superior performance in any ecosystem when the whole market is down. And why is the whole market down? We are still in a quantitative tightening environment. All right. Now, there is some good news that I'll share with you today. Let's look at some more stuff here. Anything important happening here on CNBC? I don't think so. No important stories here, at least none related to us. But there is something here that was very unexpected and was not supposed to happen. Take a look at this. The dollar index, the DXY, is going up after the rate cut. You'd think that the dollar would be getting weaker after a rate cut, but look at this. No, it's gone up, and it has been consistently going up with very large steps here. This means that the rate cut did not have the intended effect that the Federal Reserve wanted it to have. It's actually going to be something that we want to have happen. I know this sounds like a bad thing, and it is a bad thing. It's going to not be great for the next, for at least the end of the month. Probably for the rest of the quarter, it's not going to be great. But we actually need this to happen here, and I'll tell you why when we get into it. There's something else to point out. The 30-year Treasury, I don't really talk about that much, but that also had a major spike up after the Fed meeting. So we had it go down at first here, and then it kicked right back up. And then for the past couple of days, it also kicked back up. Now, the first spike down and then the spike back up, that's just algorithmic trading going on there, where the ETFs are automatically rebalancing or doing their forced selling or their forced buying. But the rest of this here, this is the market reaction to it all. And the reason I'm pointing this out is just because of how dramatic of a change it is here for it. And look at this. The 10-year Treasury actually moved up. It didn't really move down that low. It only moved down to like 3.99%. That was the lowest it was, and it was only there for a second. But it moved up to 4.12%. It's not supposed to do that. There's a reason why it's doing this here, though. We'll get into that a little bit later today. If you want to check out like the upcoming Fed meetings, we just had one here and everything. The next one will be in 40 days. Already they're pricing in our rate cut because this first one's not doing what it's supposed to do, so they're going to have to try it again. And then they're pricing in a third rate cut because, you know what? Jay Powell said it's going to happen. So they are going to cut the rates. So, of course, the prediction markets are already pricing it in. They're going to. All right. Well, hello there, Tom. Nice to see you here. So, got a couple of, I don't want to say fudsters. Like, only one of them's really a fudster. But a couple of critics that we got to take care of today. And believe me, I'm pretty pumped up about like this one channel called A More Perfect Union. Yeah. If you ain't heard of this channel, go ahead and take a look at it right here. Take a look at it and then tell me, what do you think their political persuasion is over at that channel? I'm going to get into that here while I'm gulping my vitamins. But a little bit of housekeeping here first that I do on every stream. Would you like to get a copy of this book 100% for free? It's called Your Parents Were Wrong, Debunking and Replacing Outdated Advice. I know it's a very bold claim here for me to make, to say, oh, your parents were wrong. I mean, how would I know? I didn't have your parents. Well, if you're my age, you had boomer parents, and boomers are really not the people qualified to be giving you life advice. Because I got to tell you, my boomer parents told me some pretty dumb stuff, like follow your heart and the money will follow. Pursue your dreams because this is America and you can be anything you want. Oh, any degree is a good degree. You can't put a price on education. And so I went and got myself a useless degree from the University of Central Florida, a useless degree in acting. And man, did it cost me. As a matter of fact, I'm going to reveal a little bit to you guys here today. I'm going to tell you a little bit about my past. You guys want to know something? One of you already knows this, but my degree was so useless that when I graduated in 2012, the first job I had was actually cleaning carpets, but because that didn't pay enough, I was so desperate back in 2012, I actually had to resort to stripping. That's right, I was a stripper for a good 2 years of my life. That's how horrible the 2012 economy was under Barack Obama, which I'm sure the YouTube channel, A More Perfect Union, thought was just this great time. Thought that, oh yes, everything was amazing under Obama. Even though that was actually the bottom. 2012, that was the bottom of the housing market. The whole first 4 years of his president, housing prices just kept ticking down. Then they hit the bottom in 2012. Jobs were horrible. The economy was horrible back then. It was so bad that that was the only place where I could find a job. But I'm not going to lay all the blame on Obama here, because some of it was my own fault for listening to my parents' advice when even back then I was kind of questioning them. Like, wait a minute. how easy is this really? Like, I go get a degree in acting, and then I just go out to Hollywood and I be an actor and I show them my degree and I get a job that way? I was thinking a little bit, but not deep enough on the matter. So I do blame myself. It is my own fault for not being like, wait a minute, it can't be this easy. But you wanted to believe that it was. You wanted to believe that the dreams come true. And everybody was telling you, yeah, dreams do come true. So if you want to get this book here for free that rips that advice apart, and along with many other stupid pieces of advice that's commonly passed down to the millennials and Gen Z from their boomer parents, you can get this book for free. All you got to do is head on over to my Substack. It's reinventideal.substack.com. And here at my Substack, you just click the tab right in the middle that says free gift. Scroll down here and click the subscribe button. It costs you absolutely nothing to subscribe to my Substack. It is 100% free. All of the articles are free. And it's a good way to stay in touch with me here, because you're on my email list then, and then you find out what am I going to be doing, what is some of my latest updates and everything. Substack is really the place for it. So you want to get on that list here. You get a copy of this book for free. Eventually, I will do paid articles, and when I do, if you want to become a paid subscriber, you want to start right now, you'll get a copy of this book for free. It's called Bitcoin Begins, Bitcoin Explained Using Batman, which is a great way to explain how Bitcoin works to your friends using analogies that they understand, because who doesn't know about Batman unless you were living under a rock? I'm pretty sure everybody gets Batman. Matter of fact, I think Batman is probably the healthiest piece of intellectual property out there. Like, Star Wars has been totally destroyed, and Lord of the Rings is getting destroyed with every Rings of Power that they make. Let's see. Star Trek has been totally destroyed. I guess Harry Potter's still got some health in it here, but it's a pretty divisive thing. Like, even before J.K. Rowling came out with her political beliefs, still there was a lot of division over Harry Potter, because some people really liked it, some people despised it. Game of Thrones, that's totally destroyed. Yeah, it's really hard to think of any Marvel universe, the Marvel Cinematic Universe, that's totally destroyed. There's no value left in that intellectual property. So yeah, I think that Batman is the only piece of intellectual property left that hasn't been totally destroyed or ruined by some of the worst writers in the world. This current generation of screenwriters and directors and everything is probably the worst that we've ever seen in the entire history of Hollywood and screenwriting and just creative stuff in general. It's the worst that we've ever seen. So that book will help you explain it to your friends. So how about we get right into it today? I want to show you a channel that I discovered recently where they said, oh, yeah, look at this crypto thing. The name of the video, it actually says, we went to a crypto conference and we were scared, absolutely scared, trying to fearmonger and everything. Hang on, I gotta adjust the camera. Don't know how it gets where I don't want it when I really don't screw with it at all. It screws with itself somehow. So let me go ahead and share my screen here with you. And let's find out. Yeah, here it is. Got this one. We went to a crypto conference and we left terrified. Oh! Panic, panic, panic. Terrified. So I'll show you where we're at here with this. What really ticked me off here was, as I'm looking through this, I'm just reading some of the comments. Oh, yeah, I left a comment right here. I'll get into that here, but here's what they say. It's oh my God, this is the biggest bunch of divorced dads I've ever seen. So this is what the left really thinks of you guys out there, particularly you men. I wonder why the Democrats can't get men to vote for them because of the crap that these people say. This is the typical Democrat bull crap right here, where they say, well, you're only valuable as a man if a woman thinks you're valuable. You're not good enough and you're not in good standing with society as a man unless you have a woman that vouches for you, like your girlfriend or your wife. If you don't have that, well, then you're just a scumbag, and they think you should really just off yourself. because you're zero value to society. Ask me how I know this. Because there was a business I was running before I was doing this full time here, before I was doing all this streaming and everything. The business I was running was helping men that were left behind by society, that were only probably days away from making an irreversible decision with their life. You bet I'm very fired up about this right here. I get very fired up about this subject. It's something that really ticks me off at how inhuman most people are, particularly on the left, when it comes to men. Like, we really are second-class citizens in this society. Anyway, that's not the subject that we want to get into today. It's not what you're watching this program for. So I want to play a little bit of this documentary here, and then I'll tell you why it's one of the biggest piles of dishonest bullcrap and why it's so biased and loaded with trash. And this is just left-wing FUD trying to discredit crypto because somebody they don't like, namely the president, has taken an interest in it. And this is something you guys are going to have to fight when you're trying to onboard the new people, particularly the normies, because they're going to see crap like this here. I mean, how many views does this thing have? Almost 1 million views, 978,000, 29,000 likes. I dislike it here. All right, so let's have a listen to this.
Be good enough for anyone to be able to do it.
The numbers tell the story. After he promoted it, Trump coin shot to $75, then crashed to $17. 31 early traders made...
Now notice, one of the first things that they're highlighting here is Trump coin. That's not an accident. They specifically cherry-picked and singled that one out. And I'll get into like why they're doing that and everything. But yeah, all the things that they could highlight about crypto, that was the one that they cherry-picked. Gee, I wonder why.
Nearly 669 million. Early buyers escaped with 6.6 billion. Meanwhile, over 800,000 people combined to lose 2 billion. Over the last 4 years, there was one regulator against this type of speculation.
All right. Before we get into Gary Gensler here, remember this clown? Yeah, he might be coming back. He could be coming back, you guys. This is why you got to stay on the front lines here. Because I'll tell you, like, if all these clowns that are out there saying, oh, the bull run is over, but are too chickened to get on a stream and explain that with me, all those clowns that are saying that, if you guys are right, you do realize crypto's dead forever. Because if Bitcoin can't even do a 2x from its previous high with all of the support of the federal government behind it, and if Ethereum, the number one altcoin, can't even make a new high, that means that it's not doing what it's supposed to be doing, which is making people rich. That is the whole point of crypto. That's the only reason anybody's here is to get rich. We're not here for the technology, unless you're Fast Abdul. But yeah, nobody is here because they're actually concerned about the technology. None of the investors I'm talking about are here for that. They are here because they want to get rich. And if you can't get rich in crypto, then nobody's going to invest in it. If it's not going to reliably do what it's done in past cycles, it's done. It's over. And then this clown is going to come back because he's going to be on like an I told you so tour. So let's hear what they got to say about this clown. They actually try to paint him as a good guy.
SEC Chair Gary Gensler.
That guy was a prick.
Sour grapes, somebody that couldn't hack it.
I think he was unpopular for a reason.
Everybody in the chat, let me know if you can hear this, because like I've been having some trouble from previous streams where you guys couldn't hear it, particularly the Fed stream. So if you can't hear this, let me know.
The irony, Gensler helped build crypto's foundation, teaching one of MIT's first blockchain courses.
That was my introduction to blockchain technology, actually, was his classes.
As a regulator, he became the industry's biggest threat, targeting...
But here's like the dishonesty here. This is the first part of the dishonesty that they're trying to do. They're trying to say, oh, well, Gensler was part of crypto. He taught crypto, and he knew then he was very qualified to say that it was all a scam. That's the angle they're trying to go for with this.
Major firms for violations.
And then the crypto industry says, okay, it's
violations. They sent Wells notices, but they didn't say what the violations were. All right, we have the Wells notices, dude. So whoever the dumbass is that made this channel, I mean, imagine it's several dumbasses. We got the Wells notices, and we see what they were trying to go after people on. I mean, the claims that they made on Richard Hart himself, the judge actually said the SEC failed to state a claim. So you're lying already, you dumb idiots over at More Perfect Union. God, you're lying already. So this needs a retraction, and this needs an apology.
It's fine that you're coming after us, but give us clear-cut guidelines and regulation, and they never did it whatsoever.
Everyone at the conference had the same story about Gensler, and I found myself nodding along. It matched what I read, and it made me wonder, why didn't Gensler provide clear guidelines?
Tell you exactly why, is because the Biden administration, particularly the clowns that were really running it, because we know it wasn't Biden. I mean, he couldn't even handle his own continents, let alone technology like cryptocurrency and the whole industry. The reason why is because they were trying to suppress it. Prove me wrong. Prove me wrong. Like, show me where Gary Gensler visited these companies or called them to a meeting and said, hey guys, here's some really clear guidelines of actual asset regulations are not clear. I know, I worked in TradFi. Those regulations were extremely clear. We knew exactly what we should and should not be doing. And the SEC was the one that set those regulations, and you're telling me that, there's no way that they could do the regulations like that with complete certainty in this industry of crypto. Such dishonest garbage.
Law is open to all kinds of interpretation, even if it seems clear on its face. For example,
then it goes to court. It goes to court then. But still, you set the standard, you set the regulation. What regulations did they set that were unclear, but were guidelines from Gary Gensler? Can you cite a single example of that in this? No, you can't.
Example, fraud is illegal. Does the statute spell out in chapter and verse every single thing that counts as fraud? No, because if you did that, that would just give a roadmap for anyone who wanted to commit fraud.
That's the heart of it. Crypto says it's leading a revolution.
Excuse me. It's very clear what fraud is. Does anybody here have a hard time understanding what's fraudulent? Anybody have a hard time coming up with looking at something and thinking, oh man, I wonder, is that fraud? Anybody have a hard time with that? No, nobody has a hard time with that. Jeez.
That needs new rules. Gensler saw it differently. Except for a few cryptocurrencies, these are investments. File your paperwork like everyone else, which involves...
Oh! So they're securities, right? Gee, if only there was a law that was very clear about what is and what is not a security. Is there such a law? Oh, man, I think that there is, actually. What was it called, man? It called like the the Huey test, the Higgy test, the Hickey test. Oh, I know, it's called the Howie test. Yes, the Howie test, where it says that you are a security if you are an investment of money made in a common enterprise that is with the expectation of profit solely from the work of others. So, more perfect union? You idiots, will you please tell me how a cryptocurrency meets that definition? Who's doing the work for us in Hex? Who's doing the work for us in Pulsechain? Who's doing the work for us in these other coins? Huh? Who's doing the work for us in Bitcoin? Who's doing the work for us in Hyperliquid, in Athena, in EtherFi? And you're telling me that, like, what, because it's an investment of money. Okay, yeah, it's supposed to be a contract of an investment of money. So where's the contract? Where did I sign when I bought Athena? Where did I sign when I bought Pulsechain? Show me the contract I signed on. Because I can show it to you with everything I ever bought in TradFi. So it's supposed to be an investment contract made in a common enterprise, investment of money made in a common enterprise. Enterprise is a business. So please show me the business of these cryptocurrencies. We had this argument before when Richard was on that stream with Tone Vase and those other idiot lawyers. Remember that one guy? I forget what his name was, man, but he sure disappeared. He sure disappeared. It was like Jason something, Jason Sebert. I forget his name. You guys can tell me in the chat if you remember. But man, he sure disappeared. He really doesn't show his face around anymore when he looked like a complete idiot after the SEC case got dismissed. So, where was I here? Well, what's the next stupid thing they say?
Financial statements.
There's no way they could come up with.
File paperwork like your financial statements and your balance sheet, the quarterly reporting. What exactly is crypto supposed to report when they don't do any business transactions? They don't employ people. They don't conduct commerce or perform services or build products and sell them. What exactly are they going to put on their financial statements? And if you want to audit crypto, you can do it because it's all on the blockchain. It's all totally public. You idiot! Who is the idiot that worked on this, man? We got to find this idiot. Doesn't say here. You got to find, like, the guy that they have going in and out, interviewing all these people. Like, son, you should be embarrassed to have your face shown in this thing. You should be the one contacting your employer here and saying, oh, hey, we need to take that video down because, man, I look really stupid.
With audited financials because there's nothing behind them.
See? If there's nothing behind them, how are they securities? The professor that you bring on to support your argument just supported mine. And I bet your dumbass doesn't even know that.
So what the crypto industry was looking for was regulation that didn't enforce those kind of things, but still
didn't enforce things that are not applicable to their industry. I think of an analogy for like what this is like. Let's suppose I am a veterinarian and I'm supposed to follow the regulations around healthcare for humans. Oh, yeah, you need to do this test and that test, and you need to look at this insurance, and you need to file this claim here with Medicare and all that. That's how stupid it would be to have cryptocurrencies follow the same regulations as securities. So this woman that you brought on to try to support your argument, I'm sure you took her out of context because she just made my argument for me, saying, yeah, the stuff that you guys want crypto to do, and I'm talking to you guys over at More Perfect Union, the stuff that you would want them to do, that Gary Gensler would want them to do, is stuff that I'm capable of doing because it's not applicable. It'd be like asking a fish to get out of water and crawl up on the beach and dance the Macarena before it dies from being out of breath. It's not possible. It's like asking a human to breathe underwater. It's not possible. Idiots.
Give consumers enough comfort that they'd be willing to invest.
When Gensler
How would they do that? Huh? Tell me that. How would they do that? What are these coins supposed to do? I mean, first off, that's assuming that there's any company behind these coins. I mean, there's the Ethereum Foundation that's behind Ethereum, but when you request information from them, do you ever get a middle finger or told to F off? I mean, they're very open and honest about things they do that the investors hate. They are very open and honest about that because they sell down the price. They dump the price often on the investors' heads, and they don't try to hide it. They just do it.
wouldn't back down, the industry found another way forward. Buy enough political influence to replace him.
All right, that guy, somebody find out who he is. It's like, how about you come on here with me and explain to me how I'm wrong? All right. So now what they're going to do here is they're going to say, oh, well, these cryptocurrency people, they form a whole bunch of super PACs because they're all just a bunch of lobbyists. And lobbyists are bad. You got special interest groups for the bull crap that I'm sure you idiots over at More Perfect Union support. In fact, let me take a look at some of the bull crap that you idiots support. Let's check out your channel here. Hang on, I gotta fix the screen adjustment. I gotta share the screen here with y'all. What do you think that they support, guys? Let's just have a peek here at some of their videos. What do we see? Oh, we found the most corrupt stock traders. They put Marjorie Taylor Greene on the cover there, not Nancy Pelosi. How come? And I'm sure Marjorie Taylor Greene is doing is doing insider trading. I'm pretty sure she probably is because all of Congress is. But has she got the portfolio performance of Nancy Pelosi? No. I took Bernie. Oh, so you got into a car with Bernie Sanders. Gee, how do you get that kind of access with Bernie Sanders unless you're a donor or a supporter or someone that's promising him a figurative hand job in the passenger seat of your car? Figuratively. The secret history of Maha and wellness grifters. Starting to get an idea of what this guy's political persuasion here is. And, that's fine. You want to be a Democrat? Be a Democrat. Why don't you just fully disclose it? He voted for Trump. It cost him his job. Okay. What else we got here? I'm in law enforcement. Here's why I no longer support Trump. I can find you 1 million guys for every one of these guys that you find. Every one of these guys you find, I can find you 1 million guys that say the opposite. Inside the billionaire takeover of the IRS. Yeah, because the IRS is a bunch of good guys, ain't he? We went to Luigi's trial. Here's what everyone's missing. Okay, yeah. Yeah, everybody's missing it all right. What else we got here? Man, we can see you really don't like Elon Musk here. I bet you're probably one of those guys that said, nobody voted for Elon. It's not like he was at every single, or it's not like he was at most of the campaign stops for Trump. No. And like people weren't given the idea at these rallies that, hey, if you vote for Trump, you're also going to get Elon to help with policy. All right, so I think we get a clear idea of what this channel is all about. But they got the nerve to say that us crypto people are the jerks because, oh my God, we did something terrible. We raised money to push our political beliefs in our country. Oh my God. Wait. According to Citizens United, money is speech. And we have freedom of speech in this country, even though I know you Democrats don't support it. And don't give me this, we do. Look at our support of Jimmy Kimmel. Jimmy Kimmel lost his job over something he said. Imagine losing your life over something you said. So the right may have cost Kimmel his job, but the left cost another man his life over his opinion. And if you don't know what I'm talking about, you must be living under a rock. Let's get back to the idiots.
Cryptocurrency super PACs raised around $200 million during the 2024 election cycle, and they spent about $130 million of that.
Oh, screw them. That's just so illegal. We can't do that. No, we can't spend any money on promoting or pushing our political ideas at all. Now, can we? That's, How much did George Soros spend in the past election? Whatever it was, it dwarfed this $197 million number. Shut up.
Rather remarkable to see this amount of money coming out of the cryptocurrency industry, especially because they had not previously been that involved in politics.
Molly tracked.
Oh, by the way, where'd all that money come from? I mean, if we're all just losing tons and tons of money in Trump coin, how did the crypto industry even have money to go do their lobbying with? Where did it come from? It came from the money we made in crypto, because it's a legitimate investment vehicle.
Where all this political spending came from. The biggest checks from the very companies the SEC was investigating. Coinbase, charged with selling unregistered securities. They donated $46 million. Ripple.
Yeah, and here's the deal. They said that they're selling unregistered securities, but you see, they provided zero evidence that what they alleged were unregistered securities were securities. And you see, that's something that has to be litigated. And just because you pass the Howey test, that doesn't automatically make you a security. Because you know what passes the Howey test? A laundromat passes the Howey test. Is a laundromat a security? Because it is an investment of money made in a common enterprise, because a laundromat is a business, and that's an enterprise. And it has the expectation of profit, because no one opens a laundromat to lose money. Ask me how I know. And also, the profits are derived from the work of others. People come into the laundromat and do their own laundry. They're doing their own work, and you get paid for it. So just passing the Howey test itself isn't enough to declare you a security. So this stooge, where is he? This stooge, very fitting picture. I'm sure that's what his face looks like all the time. Whoever you are, dude, contact me on X. Because you need some serious education, and I'll be happy to give it to you. And maybe you can educate your employers over there at More Perfect Union, because for them to allow this crap without thoroughly investigating all of the claims that were made in this, for them to allow this crap is serious negligence and a serious lack of journalistic integrity and a horrifically frightening level of incompetence. You should be afraid that that's your employer and they're that damn dumb.
The Silicon Valley giant with investments across the industry matched them nearly dollar for dollar.
The cryptocurrency industry has been very clear that they want changes to the regulatory environment in the United States.
A little over a month into the Trump administration,
they don't want changes. What they want is clear regulations. Here is one industry that comes in and says, hey, we want to be regulated. And you got a problem with that.
And it's already happening. Gensler is out at SEC, replaced by Paul Atkins. He's a crypto lobbyist who counted the collapsed FTX.
Oh, and here's my trap card. You see, there was one person in the crypto industry that Gary Gensler did meet with and met with regularly. 10 different times. You're looking at him. Sam Bankman-Fried. So oh yeah, Gensler was a good guy and he tried to do right for the industry. Right under his very nose, the biggest fraud in the history of this industry was operating. He met with him 10 damn times and destroyed all the records of those meetings. Not one mention of that from you. Buddy, whoever the hell you are, contact me. You need some education. Because you're about to look really bad when I just rip all of this to shreds. In fact, I think it's time to start doing that. I think it's time to start doing that here. Everybody watching, by the way, if you got any questions or anything, just please throw them in the chat. We will get to them at the end of the stream here today. So, See, I think that this might have aired on Bloomberg or something, but is the guy's name Eric Gardner? I think it is. Yeah, it might be Eric Gardner. All right. So this documentary, it definitely distorts facts and it omits key context and it exhibits very clear bias against crypto. But here's the critiques that I got, and particularly around Gary Gensler. That was the part I about played the most here. I mean, it frames crypto as like this radical vision that's threatening the economy. And they didn't see this part, I didn't play it, but they used some pretty dramatic language saying, oh, it's a Trojan horse. And talking about bills like Fit 21 and implying that the industry's $200 million for the 2024 election was solely to enable fraud. This ignores crypto's role in democratizing finance. That's the purpose of this, is to democratize finance. You people should be in favor of that. But you're not. I wonder why. Gee. See, it enables peer-to-peer transactions without banks. It reduces some of the middleman fees and gets rid of a lot of them. It brings in innovation, which I know that you people at the Democrat Party are against. And you might want to say, well, no, we're crypto agnostic in this documentary. That feels so damn performative, bro. Because you cherry-picked a bunch of negative examples, like the Trump coin crash, and then you downplay successes like the Bitcoin ETFs, which actually were approved under your precious Gary Gensler's SEC. And it attracted $50 billion in inflows by 2025. Also, I think the Ethereum ETF was approved, or it was at least moved forward. It was at least moved forward under Gensler's SEC. Or they say, well, crypto lures people into speculation. Well, doesn't traditional finance kind of have the same issues like 2008's CDOs? Remember collateralized debt obligations? What do you call that? Or how about meme stocks like GameStop? Hey, you failed to note the great resilience that crypto has, such as despite the 2022 crash, the $2 trillion market crash, we still recovered to 100,000, driven by institutional adoption too, by the way. Like very little of the bull run we've experienced so far has been from, very little of it has been from any sort of retail investment. In fact, retail have been net value extractors during this season. I bet you didn't know that. So contact me, I'll educate you. Let me show you something else here, guys. A little article I found here on Gary Gensler. SEC Chair Gary Gensler. This is from last year. Investors lack needed crypto disclosures following multiple Wells notices. Okay, what disclosures are they supposed to give? Whether Ethereum is a commodity or a security has come to the forefront, though Gary Gensler didn't directly answer on how it would be classified. You're saying that, oh, he provided guidelines. He wouldn't even tell us if it was a commodity or a security. So, boy, please shut the FUD up. You lied in your documentary, or you omitted the truth, or you just don't damn well know. You need to shut the FUD up.
Hey man, just want to let you know that sometimes you gotta shut the fuck up. And this current time is just one of those times you gotta shut the fuck up. I don't think you're a bad person. I just don't want to hear you talking anymore. You gotta shut up.
I don't think you're a bad person, but you need to shut the FUD up. Stepping back from it, the field of crypto assets, without prejudging any one of them, many of those tokens are securities under the law of the land as interpreted by the Supreme Court. Can you cite the Supreme Court case? And look at this. Without prejudging any one of them, many of those tokens are securities. How can you make that claim? You say, well, I'm not prejudging it, but I'm saying that I think they are securities? That's prejudging. Do you not know the definition? And you couldn't tell us whether the coin in focus was a commodity or a security. Couldn't tell us that. So, more the criticism I got here about this. So, like, They wanted you to think that like crypto is this get-rich-quick scheme when it's a $4 trillion asset class now. There's real-world utility in remittances. I mean, stablecoins like Tether. It has $1 trillion settled every year. That debunks your claim, boy, that this is just some get-rich-quick scheme or some speculation-driven industry. Hey, look at the remittances, the cross-border payments. You telling me that there's not real use for this? That is really the main advantage to crypto, is that it's borderless money. Like, try sending like $20,000 worth of USD out of the country and see how many roadblocks you're going to hit. All sorts of fear-mongering when they ignore the FTX collapse and like what caused it. I mean, the FTX collapse, it wasn't just a crypto collapse. There was also a lot of TradFi involved with it because they were pairing up with a hedge fund called Alameda. You know anything about that, boy? I don't think you do. Yeah. The most egregious distortion is the portrayal of Gensler. It suggests that he provided certainty through enforcement, but was stonewalled by an industry demanding a free-for-all. Well, you're ignoring some pretty important stuff here, bro. All right, first off, his flip-flop on crypto classifications. Let's take a look here at this. I mean, he doesn't even provide certainty in his own words, in his own life. You guys remember, where do I have it? I got it over here somewhere. Yeah, I got it right here. You guys remember this classic Gensler thing? So first he says, first he says this, that, oh yeah, most of them are securities except Bitcoin. Then he said this earlier, though. In his class, he had a different tune.
So we already know in the U.S. and in many other jurisdictions that 3/4 of the market are not ICOs or not what can be called securities. Even in the U.S., Canada, and Taiwan, the 3 jurisdictions that follow something similar to the Howey test that we've talked about, 3/4 of the market is non-securities. It's just a commodity, a cash crypto. So you'll hear debates about initial coin offerings.
All right, you hear that? There's your precious Gary Gensler contradicting the idiocy that you promoted in your dumb documentary and contradicting himself. So when he was teaching this stuff, he said, yeah, 3/4 of this were not securities. But then when he becomes SEC chair, then he says, everything is a security except for Bitcoin. Gary, which one is it? Were you lying then or are you lying now? And he wouldn't tell us. He wouldn't tell us if Ether was a security or if it was a commodity. What were we supposed to do? We're supposed to just sit there and take it? Have a guy that in charge who's totally confused and doesn't even know his own position, let alone what's going to be the position for the entire country? I don't think that's what we do. And Gensler also refused preemptive meetings with many firms. And what he did was he sent Wells notices instead. Coinbase sued the SEC in 2023 after a Wells notice because there were no clear rules despite 30 meeting requests where the SEC rejected every single one of them. Gary Gensler rejected every single one of the 30 meeting requests. We came to you 30 different times, probably more than 30. 30 different times, though, we came to you saying, hey, let's meet and let's talk about what the rules are. And Gary Gensler said no. Crypto.com did the same thing. They got a Wells notice, so they sued. Multiple firms like Consensus, Uniswap, they received notices without any dialogue. Gensler's certainty was post-facto lawsuits, not proactive guidelines. Yeah, he made a lot of open-door claims, but he rejected every request for a meeting, except for Sam Bankman-Fried. Gee, what did they talk about? 100+ enforcement actions, including the ones brought up against Richard Hart, where they alleged that it was a security. And not only was it not a security, but not only was it dismissed for jurisdiction, they didn't have the jurisdiction to go after him, it was dismissed for failure to make a claim. Judge Carol Lamont said, you people over at the SEC are so incoherent and frankly so damn stupid that I'm reading your complaint here and I don't even see a legitimate claim. How about Gensler's pre-SEC views, like the one I just played here for you? He had stated that most cryptos are not securities, including Ethereum. He actually spelled that one out specifically. He said 3/4 of them are commodities. But then as SEC chair, he flips and says, well, most of them lack value as they are securities. They lack value. How does that automatically make them a security? You got to go through the Howey test, bro. And still, even when you pass the Howey test, that doesn't mean that it's automatically a security because a laundromat passes the Howey test. Gensler met with SBF 10 times, 2021 to 2022. He also met with IEX's Brad Katsuyama, where FTX was seeking a stake in IEX. And then ethics scrutiny arose. But then the post-FTX collapse, when Republicans investigated the SEC's timing of the charges against FTX, well, Gensler denied favoritism, but meetings raised cozy ties questions, especially FTX that pushed for CFTC oversight. And FTX also had Sam Bankman-Fried penned his own proposal on legislation and regulations around crypto. He wanted there to be a license to even participate in this, which would have killed DeFi overnight and probably killed crypto in the United States. Because what he wanted was every crypto transaction running through FTX, running through him, so it would enrich him and all of his cronies. Because take a look at SBF's parents. What party are they very actively involved in? You see, they wanted to take the entire crypto industry and make it as powerful as like a George Soros level source of funding for the Democrat Party. And you're going to say, well, you have evidence of that? I would like to point to the evidence of it, but as it was recently released here, all of the records of the meetings between Gensler and SBF were destroyed. Why did that happen? Where did all those records go? Why were they removed? If you wanted to do a documentary on something serious, that's what you should have done a documentary about, is where are those records? If you gave a damn about the little guy, because the little guy got really effed in the A during that FTX debacle. But you don't really care. It's evidenced by this. And by the way, crypto's super PACs were bipartisan. They were backed by pro-innovation candidates. They won 48 plus political races. Traditional finance did a lot of lobbying too. They spend about roughly $100 million a year, even in non-election years. How about FIT 21? FIT 21 eviscerates securities laws via blockchain carve-outs and says, oh yeah, it's the CFTC that's supposed to watch all this is underfunded. FIT 21 just clarifies definitions. It says, well, here's what is a security, here's what's a commodity, addressing Gensler's ambiguity. He wouldn't even give us certainty on Ether, the number 2 coin. And the CFTC lighter touch commodity, it's a weaker regulatory body. It can't do the job of the SEC. Bro, give me a break. I mean, the SEC couldn't even do the job of the SEC. You know how many losses they had when it came to crypto? For one, Ripple had a partial win. And they got destroyed and embarrassed and humiliated by Richard Hart. So what those losses suggest is that the overall regulation needs reform, not evasion. They want to create the idea that crypto integration is as risky as like the moments of 2008 when everything collapsed. They isolate the year 2022 and say, look at this, that's a very typical year in crypto. And it didn't spill over, the 2022 crash. Yeah, $2 trillion down the drain, and FTX is $8 billion. But how much did that spill over? Not that much here. It was pretty contained. Unlike 2008's interconnected collateralized debt obligations, crypto's $3 trillion market was segregated at the time. And the ETF, $50 billion in the ETFs, their custody separated. And this documentary ignores blockchain's transparency that reduces fraud and the things that we typically see in the very opaque TradFi world. So enough about those scumbags. Those scumbags there. They have no clue what they're talking about. And if the dude that was in that documentary wants some education, contact me on X. I'll be happy to provide it to you. Now, we got to call somebody else out who I like. Yes, there's a guy that I do like personally. I think of him fondly in the sense of like, he has helped me and a lot of other people avoid serious pain. Because he was not the first, but he was the loudest voice against Sam Bankman-Fried. I mean, frequently, I mean, you saw the streams way back. He called SBF a son of a bitch. That was a very entertaining time to be watching BitBoy. It was like when he was on the crusade against FTX. That was a very entertaining time. And I remember he called like one of the Bankless boys a douchebag, and then later went on the Bankless show and was face to face with him and everything. And he's held his ground very well. They even, those guys over at Bankless, even said, "Oh, but Ben, you're a lot smarter than we thought you were." I got to call Ben out today because if you watched his program today, here's what he said.
Probably we won't see a bear market. Just sold BNB for Hex. I don't think that's a smart idea. I mean, Hex seems to be dead pretty much, in my opinion, doesn't it? I mean, you guys are still in that ecosystem. Pulsechain looks terrible. Hex has not done well. Which coin is like hype? Is it Aster?
All right, so you hear it there. This is what he had to say today, is that Hex is dead and Pulsechain looks terrible. Now, is there any truth to that? Let's investigate. Like, is Hex really dead? Is Pulsechain really terrible? Is it looking terrible? Well, I have a way to verify all of that. So let's verify. Which one should we start with? Should we start with Pulsechain or should we start with Hex? Let me start with Pulsechain because I've used this before here. You see, there's a certain scumbag out there by the name of Jail Rat Crypto who likes to talk trash about it all the damn time and likes to say that Pulsechain is dead. And then when I showed him this, suddenly he's been leaving me alone, and he learned how to finally shut the FUD up. I mean, he still spreads FUD, but he doesn't spread it to me anymore. So here's what we got here. This is DeFi Llama, and this ranks all of the chains by TVL, total value locked. Don't have to scroll down that far to see Pulsechain is right here, number 27 out of how many? 462. 27 out of 462 chains. That's how good our TVL is. So if you want to say that Pulsechain is looking terrible, well, I know 435 other chains that would love to look as terrible as we look right now. How do you respond to that, Ben? I like you, Ben. I'm glad you're back. I was a big fan of yours when you were a BitBoy over on the network that is now Piss Cover Crypto. I was on your side when they all stabbed you in the back. And I was watching your new channel and everything. I was on your side. So I'm glad that you're back. And I want you to still succeed. I want you to build a new channel. The one that you have right now, I want it to surpass and embarrass Piss Cover Crypto. But you're wrong about this. And here's the proof. Can you prove me wrong? I'm happy to discuss this with you, Ben. I have a lot of respect for you. I don't have respect for More Perfect Union and that scumbag that they had on, but I got a lot of respect for you. So can we discuss this, Ben? Because I need to know why something ranked 27th out of 462 looks terrible to you. And then how about Hex? Is that Hex is dead? Gee, if only there was a way that we could verify it. Oh, hey, RH Max, I see you there. Checks my pulse. I see you there too. So, yeah, is Hex dead? Well, thankfully for us here in the community, we got this very fine gentleman by the name of Ben Sierra that's keeps track of these things here for us. That's right. And here's what he says here is that long-term staking is actually on the rise. By long-term staking, he's specifically referring to people who stake for 5,555 days. There are now 47,000 addresses that are doing that on Pulsechain. And then there's 42,000 addresses doing that on eHex. If this is dead, well, please show me what's alive, because this looks like growth to me over the past year. And a little over a year ago, I remember, Ben, you and Cassie were doing a show. I think it was called Zone 5, right? Yeah, Zone 5 podcast that was dedicated to Pulsechain and Hex. So while the staking was lower and weaker, you believed in it enough to do a weekly podcast on it. But now that it's stronger, you're saying that it's dead? Ben Armstrong, I got nothing but respect for you. Love you like a brother and everything. We should talk about this here, because to say that this is dead just goes against the facts and the numbers right here. All right? And also bear in mind, there's one person that says Hex is dead that you don't want to agree with, and that's Nick Diamandi. You don't want to be Nick Diamandi, all right? Don't be Nick Diamandi. Be the Ben Armstrong I remember. All right? So I had to do that here. I had to call out Ben Armstrong. Hopefully, he and I can talk about this. Somebody else I'd like to talk to about this is Lark Davis. Yesterday on his show, he dished out a little bit of hate to Pulsechain. I don't want to say hate, though, because you see, here's the old Lark. Like, he just doesn't want any part of it. And here's what I think it is. I don't think it's like pure malice or anything, but during the outrage marketing phase of Richard Hart's career, a lot of people made up their mind right then and decided, yeah, I'm not going to like this guy. And when people make up their minds, it's very unlikely that they change their minds. It's very unlikely that they go back and think, oh, yeah, I was wrong. It's very difficult for people to admit that they were wrong. That's all it is. So maybe one day he turns around, maybe not. But a lot of people, once they make up their mind, they kind of stick to it. They're very set in it. And that's really like not the people that we should be all that concerned about. Because like the people that are in crypto already, yeah, a lot of them have made up their minds. But you know what's a bigger number? What's a greater size of people? What is a collection of people that dwarfs the people already in crypto? The people who are currently not in it. The new people. The normies. That's who we should be focusing on convincing. All right? Now, a couple of other things here I needed to show you guys. And speaking of like, this is why I think eHex is still a thing. Is because that's where the new people are going. Now, why is it having this pop here lately? Now, I can't wait to have the discussion with T-Bird, because T-Bird, he is thinking that eHex is benefiting from the marketing and everything. I don't know about the mass marketing. I'm not so convinced about that. But I do think it is kind of interesting that eHex is the one that's popping right now, when clearly it looked like the devices were meant to get people over to Pulsechain. But I think eHex is still a thing. And this is how I know that the bull market hasn't started. Because the debate that we're still having about eHex versus pHex, that's a debate that only exists in a bear market. If we were in a bull run where everybody's making money easily, we wouldn't be talking about that. Nobody would care. It wouldn't matter. But still, people are like, oh. They're having like this very reductive, defeatist, self-fulfilling curse of an argument where they're saying, oh, you people over in that version of Hex are hurting us in this version because there's only so few of us that are ever going to invest in Hex, and we all need to just gather around just one coin. Like, no, that's not the deal. I mean, if that's what you think, that there's just the people that are in these coins right now are the only people that are ever going to be in these coins, well, we've already lost. We've already lost, and the chain is over. Because what we should be focusing on is getting new people, getting normies into this, not getting the people that are already in this ecosystem to rally around just one coin. Because what you're saying there is, well, the people that are already supporting Richard Heart are the only people that ever are going to support Richard Heart. What you got to bear in mind with EHEX, though, like, here's the reasons I support it, right? And it's not me saying that I like EHEX over PHEX. I don't. I do think PHEX is better than EHEX, but I don't think that we should just trash and abandon EHEX. I think that's a bad idea. It's like that Beatles song. If you're talking about destruction, don't you know that you can count me out? Because here's the deal. EHEX is easier to find. It's easier to buy. It's easier to onboard. And I don't think that we're limited to the amount of people, that our success, our pool of new buyers out there is limited to just who's in the ecosystem right now. I don't think that there being 5 Richard Heart coins scatters the capital so much to the point where we're never going to be able to get past where we are right now. See, I think that more choices, more options is good. Gives us more variety, and that gives us more opportunities to bring in more people. Matter of fact, I think Hex on multiple chains, not just on Ethereum and on Pulsechain, but Hex on other chains, I think would be good for us too. I would be a cheerleader to see Hex on other chains besides Ethereum and Pulsechain. Now, I know that Pulsechain is where we want it, just because Pulsechain was made specifically for Hex, and that's probably where it's going to have the most success. But here's the deal. You never know what coin on what chain is going to pop first. You never know which one is going to pop the hardest. So it's good to just buy a little bit of everything just in case something pops and you don't miss out. You didn't buy the wrong one. You see, that's why I'm not a maximalist of any kind. I'm not a maximalist of a particular coin. I'm not a maximalist of a particular ecosystem. I buy a little bit of everything. And also, if it fails, that failure is not isolated. Because if it fails here, how is Pulsechain going to succeed? When people are going to think, oh yeah, we would love to invest in the Hex on Pulsechain there, but when we take a look at the Hex on Ethereum, it looks like the community abandoned it. So what's to say that the community is not going to abandon the one on Pulsechain? What's to say that Richard's not going to abandon that one? And if it succeeds, well, it's much easier for Pulsechain to succeed. Like, oh, wow, this project that he found way back in 2019, that it's still alive, it's still going, it's still thriving. Well, I think that what he created just now, this past cycle here in 2023, is also going to be successful. I think that that's a much more likely argument. But to say that, oh, we all need to be in one, that's defeatist, that's reductive, and it's a self-fulfilling curse. And also, I got to show you guys this here. This gets me in trouble here. Like, yeah, I had this debate. Well, I don't think it was really a debate, but I did have this discussion in Tam Space, which we do on Tuesday nights at 7 p.m. Eastern time, by the way. We had a little bit of this discussion with, the guy that disagrees with me is Gigapulse, who I like. Got a lot of respect for Gigapulse. No hate on him. But here's where I'm looking at. Here's what I'm looking at here is when I look at the charts. Go to the all-time for Hex on Pulsechain. This looks pretty wild. I mean, we do got to bear in mind that coin market cap doesn't have... Well, I think it does have the full chart, actually. Yeah, I think it does. Because we did launch May 19th, didn't we? I think we did. 2023. Okay. So you look here, it says, hey, you're down 48%, which we can easily come back from. I mean, that's less than half. That's a day. But when you go over to EHEX, this chart shows that we're actually still up. We are up 1,219%. I don't know if like it captures the actual launch day price. I mean, I thought we launched in December 3rd of 2019, not December 24th. And like maybe the price was higher, but here's the deal. Like technically both of these coins are up from launch because at launch, everybody was given these coins for free. And CoinMarketCap, it doesn't accurately report this here or anything, but that doesn't matter because people don't go to CoinMarketCap and question the accuracy of it. They just look at the numbers and decide what to buy from that. And also, when you hit log, this is still up. This is still up. It's not as up as it used to be, but this is still a positive. This is still a positive gain from where they started measuring. As you hit log over here on Pulsechain Hex, this is still down from where it launched at. I'm not saying that this is right. I'm not saying that I like this. I'm not saying that E-Hex is better than P-Hex. I'm not saying buy one over the other. What I'm saying is don't kill one and hope that it helps the other, because I don't think it helps the other. And what I also would say is you're not going to regret buying a little bit of each of all of the Richard Hart tokens. I do not see any disadvantage to buy in a little bit of all right. Now to talk about the market. This form of marketing. I don't want to working really hard on the effort. Like RG, he's working really hard on it. RG3. And I think Crypto Coffee is out there with him, and he's working on it. Wild SJ, they're doing everything they can, volunteering their time. So I don't want to talk trash about it. I just want to do a wait and see here. I'm happy to be proven wrong. But I also want to prove something right here, that green candles are absolutely the best form of marketing. Let's take a look here at what I think would result in interest in Hex or Pulsechain. So look at Pulsechain here. What I think is evidence that people are interested in Pulsechain and want more information about it. I mean, that's evidence of successful marketing. Let's take a look here at Google Trends. And looky here. Over the past year, interest in Pulsechain was at its highest in the weeks of August the 10th through the 16th. What was going on then? Anybody know? Anybody want to take a guess? Anybody remember? What was happening during the week of August the 10th through August the 16th? So what I'm going to do here is I'm going to play one of our little ads, and then when we come back, somebody in the chat try to enlighten us. What do you think was happening then?
Why does crypto suddenly explode into unbelievable bull runs, only to crash just as fast? It's not luck. It's not random. It's macroeconomics. In decrypting crypto, you'll uncover the hidden forces driving every major crypto rally, forces tied to the global debt machine, central bank liquidity, and repeating market cycles. This isn't another blockchain basics book. This is the blueprint Wall Street doesn't want you to read. The playbook that shows you why crypto moves when it does, and how to spot the next bull run before it starts. Don't miss the next cycle. Read Decrypting Crypto. Arm yourself with the knowledge to ride the wave before it leaves you behind. Decrypting Crypto by Cairo Code. Available now on Amazon and Audible.
All right, so that, guys, is my book that explains why does crypto go up when it goes up. That's the whole purpose of that book, is to explain to you in precise detail. What causes the crypto cycle, the bull runs, what provokes it, what guides it, what governs it, what drives it, so that you can tell your friends in exact detail what does it. Because they're going to be asking you, hey, why are these coins going up here? And if you don't have a good answer for it, I think it's going to be really hard to keep them invested or get them invested. You just tell them, oh, I don't know, number just goes up. You want to be able to tell them, hey, the reason why this asset class is performing as well as it is because of A, B, C, and D. And when you tell them all that detail, they're going to be more confident in their investment in the asset, and they're going to stay invested throughout all of the volatility. So that's what that book does for you. It is now available in paperback, by the way. So if you want a physical copy of the book, you can get it in paperback. Now, what I'm trying to show you here with this chart is that interest in Pulsechain was at its highest August the 10th through the 16th. Why was that? Well, what was the price doing? Here's what the price was doing. It was doing pretty good. Pretty good here. Hang on a sec. Let me bring it up over here. Sorry, you guys. Gotta make it larger is what I gotta do. All right, sorry about that. So remember, the week was August the 10th through the 16th. Well, just a week prior, we had this nice little pop right here where Pulsechain went up to quadruple 0.5, comes down, then goes right back up. It had a nice run up right here. These are green candles coming in. And during that week, I think we were the only green candles or the only green bubbles in crypto bubbles. That's what I think that was causing this here, guys. See that? So first we got a nice pop. This was a really nice week of green candles right here. Going from like, down in the 3s up to the 5s. And then doing it again right here. That led to a lot of interest in Pulsechain, as reflected here by Google Trends and the search volume data. And then that also led to a nice pop right here, where we almost hit 5.5. So this proves me right, guys, that the best marketing is green candles. So instead of spending money to buy postcards and have them printed, instead of spending money to buy advertisements or spending money on NASCAR sponsorship, just take the money that you were going to spend and buy the coins and create some green candles. And then people will see those green candles and they'll be like, hey, I'm interested in that coin right there that had a nice big pop. Why don't we go buy that? Or why don't we look into it at least? This shows you all the proof that you need. I'm right. You guys should only be listening to me, all right? Yes, I know this is ego self-indulgence here for me. But hey, somebody questions me, if somebody thinks I'm wrong, hit me up and come tell me how I'm wrong. On that note, the challenge is still out there for any bear market person out there that says that this market cycle is all over and the bear market is right around the corner and it's going to be crypto winter real soon. Come on, let's have that discussion. All right, I'll go on mute when you talk. And when you're done talking, then I'll come on. I'm not going to call you names or anything as long as you're sincere and you're honest. You're not just here to shill a coin, or you're not just here to, talk trash and be like, oh, yeah, you're such an idiot. We can have a nice, respectful debate. You guys saw I had a nice, respectful debate with Pedro over on RH Max's channel. So any bears out there, you guys see a bear, why don't you guys have been doing this lately, say you see a bear out there, bear posting, you say, hey, why don't you debate Cairo on this? Because I'm happy to have that discussion. All right. And that's another thing that we can also debate is the right way to market this coin, because I just showed you, create green candles. That's the best form of marketing ever. All right. Now, a few other things here about that market cycle. Let me show you this here. You guys seen this here? This is the GMI Cycle Top Finder. And That's GMI just means a global macro investor. And what they're measuring here, is just the size of those moves that Bitcoin is making, the speed at which it's making it, and just like how many people are like buying into it all at once, how many orders are being placed all at once. Yeah, the parabolic runs that we're used to getting. Each one of these you see right here, like 2011, 2013, 2017, 2021. This represents a lot of parabolic runs here. And that's how the market cycle usually ends, is with a parabolic run, a blow off top. And when you compare the trading volume and just the size of the moves, even in dollar bill flows of dollars involved in each trade, they're saying here that, yeah, this is nowhere near close to where bull market ends usually occur. This is nowhere close to a cycle top. You see, you got to have these black lines get all the way up close to the pink line right here, because that indicates, yeah, that was a parabolic blow-off. That was euphoria, or that was irrational exuberance. What the chart here shows you is that we haven't had that. And I'll tell you, here's why we haven't had it, is because all of the upward buying pressure that we've seen so far this cycle has been from ETFs and treasury companies, institutions. We have seen very little retail participation in this market, probably still suffering from like some serious PTSD from the 2022 crypto winter. It's possible that's the case, but retail's not here yet. When I tell you guys, like, this bull run never began, it's not even gotten started yet. This is how you know I'm right, because other people agree with me here and they're saying, yeah, there hasn't been a liquidity injection, because liquidity injections into these markets is what causes them to go up. I mean, it's not what we want to hear. It's not what we like. It's not the ideal situation. Like, the ideal situation is that we go up because people see the value in it. That would also be the case with the stock market. Like, the reason you're investing in these stocks is because they're profitable companies that are doing well. That's not the reason people are investing in stocks. It's all about liquidity injection. It's all based off of the debt cycle. It's all based off of the money printer. That's what's going on here. And I'm not the only one who says, well, that money printer is going to have to get turned on, because somebody else wants to say that too. And it's somebody that we usually disagree with. When you got two people who disagree, or two people who usually disagree, when they finally cross paths and agree on something, you should pay attention, because that probably is something true. Here's what I'm talking about. Good old Peter Schiff. Good old Peter Schiff here. He says, as I warned, now the Fed has cut short-term rates by 25 basis points. Long-term rates are rising. The yield on the 10-year Treasury is back to 4.14. It was down to 4.02 the day prior to the rate cut. I think the yields are headed back up to 5%. Fed's going to restart QE. They got to restart QE, meaning they got to buy a lot of those bonds, take them off the market to bring the yield down. We like that. We want that to happen. We like that. We want them to bring the yield down by printing money through QE and adding those bonds to the balance sheet, because every time that they've done that, that was when the real bull run began. When they did QE back in 2017, we had the bull run then. When they did QE back in 2013, we had the bull run then. And the most memorable one was when they did QE in 2020 and 2021. We got a nice double top there. So Peter Schiff, he wants it. He wants the QE to start so gold can go up, because he's one of those gold guys. And yeah, he's right. Gold is going to go up. It hasn't come to the end of its run. He thinks that this thing, gold, is going to go up to about $12,000 an ounce. Could be. I'm not the expert on gold. He is. So I'll defer to him on that. What he's wrong on, though, is he thinks, well, Bitcoin is just going to shrivel up and die and crypto is going to disappear. I'm like, no, that's not going to happen. Because when you turn on the money printer, that is going to cause more liquidity and more money being added to the world money supply. And those dollar bills that you add to the money supply need a place to go. And when they don't have a place to go, where do they end up? Financial assets. Which financial assets have the lowest amount of liquidity, the lowest amount of supply to buy? Crypto. All right. So he's saying that because the yield, because the rate cuts are not doing what they're supposed to do, in fact, the opposite is happening. The market doesn't have confidence that these rate cuts are doing what they're going to do what they're supposed to do, and they're not going to help the debt situation for the U.S. Treasury. The yields are going to go up because, you see, here's the deal. When you in your personal life have lots of debts, like you got a mortgage debt, you got a car loan, you got a student debt, you got lots of consumer debt and everything. If you try to take out more credit, if you try to borrow more money, you have to get a higher interest rate. That's how they do it in the real world for you and me. If I'm $100,000 in debt, I'm going to be paying a higher interest rate than if I was just $50,000 in debt. And as I try to get more debt, I pay a higher interest rate. Well, what the market sees here is that the federal government is trying to do the opposite. The federal government is trying to get a lower interest rate while it borrows more money and goes deeper into debt. That goes against the forces of financial physics. That goes against all logic. And the market is saying, no, you are not getting away with that. You are not getting away with that. We are going to do the opposite. We're going to get out of these bonds because, one, like you're cutting the rates here, so there's less reason attracting us to it. We're going to get out of these bonds, and we're going to go invest elsewhere. The only way that the Fed fixes this, the only way that the government fixes this, the only way it gets fixed at all is if the Fed takes the unilateral action to turn on the money printer through the form of quantitative easing, printing dollar bills to buy up these treasury bonds, take them off the market, put them onto their balance sheet, and then once those bonds are there on the balance sheet and off the market, then there's less of those bonds out there to buy. So because the supply is lower than the demand, that would bring the yield down, even though the yields are not necessarily a reflection of supply and demand with the treasury bonds. They're typically a reflection of growth and inflation expectations. When you turn on that money printer and buy these things up and take them off the market, now the supply starts to matter. See, it's the opposite. When it's the opposite, when there's greater supply out there, that doesn't make the bonds cheap. That doesn't make the yields high. But when there's less supply out there, that does make the yields low. Now, this dumbass, and I have no problem calling him out here because you guys probably been trolled by this dumbass right here. Good texture. God almighty. Look at this retarded thing he just said. Restarting QE is ultra bullish for bonds. Ultra bullish for bonds? I mean, are you talking about like how that makes the bond price go up? Yeah, that's good. But it makes the yields come down. And the yields coming down doesn't really attract a lot of new buyers to bonds. The only people that are going to be benefiting from this here are going to be the people that already have bonds that the Fed is looking to buy. Now, I'll tell you, this dumbass right here, whenever you post something about Hex, he comes and trolls you about it. Let me show you something about this guy. He's got 5,500 followers. But are those real followers here? Because look at this here. You see this? He's only got 3 likes on his post here, 4 likes on this post. This is one he reposted, so we can't count that. 2 likes on that post. I mean, this tells me here it's a face only a mother could love. But it looks like a face full of pubes right there. He got pubes all over his face. You got 5,000 followers, but you're only getting 4 likes per post. What that tells me is that you bought those followers. That's what that tells me. And oh yes, QE is going to be great for bonds. It's going to push the prices up, which pushes the yields down, which is bullish for everything else except bonds. Really bearish for the dollar, but that's what we want. There's another thing to look at here is the refinance index versus the 30-year fixed. This is from Melody Wright. If you don't follow her, but she is definitely worth following on X, also on Substack, and also on YouTube. If you want to know what's going on in the housing market, this woman can tell you exactly what's going on in the housing market. I got so much respect for this woman, Melody Wright, because what she did was something that all these other analysts would not do. She got in her car, drove around the country at all of these new home construction sites and looked at what was really happening on the ground and then reported on it. So, refinance applications went up while mortgage rates did the opposite. Mortgage rates are going against what the Fed is saying. Like the Fed rate cut should have the mortgage rates come down, but they didn't. They went up. So not even the mortgage rates are obeying the Federal Reserve rate cut, in the sense of like when they cut those rates, that should have a domino effect where rates all across the yield curve go down. But they didn't. They're doing the opposite. They're going up. The 10-year Treasury isn't the only one. Even 30-year bonds and 30-year debt obligations are going up. Their rates are increasing. QE is what they're going to have to do to fix this. Here's another thing to point out here is that the foreign holdings of U.S. Treasuries have gone down with China. China's been reducing its exposure to U.S. Treasuries. They've been doing it for a while, though. Like the majority of it. And I think this is probably also what helps bring about the bear market in stocks in 2022, is that in 2022, they started dumping a lot of their treasuries there too, or just letting them mature and roll off the balance sheet, kind of like, how the Fed would allow them to roll off the balance sheet. This is interesting right here. See, they're the third largest third largest holder of all treasuries, and they're actually selling these bonds now. They sold 26 billion of these government bonds, which that's not large for treasuries in general, because there's $37 trillion of treasuries, so 26 billion is a drop in the bucket, but it's a large position for them because they only hold about 731 billion treasuries. They're getting out of them. Now, who's buying them up? It still has demand for them, because the UK bought a bunch of these and Japan bought a bunch of these. So this isn't something to get alarmed about yet. It's not a problem yet, but this could be a problem. And the third largest treasury holder is reducing their exposure to it. And if they are a leader of foreign investment in the United States treasuries, this could be a big problem here, because if the rest of the foreign market for treasuries follows suit, that's about 1/3 of treasuries, 1/3 of the U.S. debt that's in trouble, that they have a really big problem refinancing. They have a real big problem when they got to roll that over this year and next year. We already looked at this year, the staking and everything. That's why they got to turn on the money printer. Is if the investment in treasuries keeps going down, which causes the yields to go up, if that investment keeps going down, you're going to have to get something to invest. Typically, you print off the money to get that to get the money to invest in those treasuries. All right. So I agree with Peter Schiff, and it's great that he's bullish in that sense. I mean, he's still very bearish on crypto, but I agree with Peter Schiff here finally. And because he and I agree, something here is true, because normally we don't agree. And he had some interesting takes on the Fed rate cut that occurred this week here. I was listening to him shortly after, and he did a really nice stream here, and he pointed out a couple of things here, like the Fed's forecasting and credibility is now in question. Because what Jerome Powell admitted in his press conference is that the FOMC and their forecasts lack confidence because there's lots of economic uncertainty ahead. But the 2% inflation target is not going to be met until at least 2 years has gone by. That's what they said here. They forecast that, hey, we're not going to get back to the 2% for at least 2 years. This is a startling admission, I think, because suppose you got a weatherman that's forecasting with no confidence. Well, this makes the 2% target that the Fed has, the 2% inflation target, meaningless. Like, it hasn't been met in 7 years, and cutting rates into rising inflation, that reeks of recklessness. So the Fed is basically doing a lot of wishful thinking, kind of undermining its own credibility. Could be political motives behind it, where they're trying to drive policy over data, what Lynn Alden talks about. They call it fiscal dominance. The fiscal dominance could be forced in their hands here. It was also a very interesting thing that he had said about quantitative tightening. You see, Powell, he justified ongoing QT despite the rate cuts by claiming that the quantitative tightening is minimal and it aims to reduce reserves from abundant to ample. And he suggests that stopping quantitative tightening would signal quantitative easing, which he wants to avoid. So he says, we're still tightening, but we're not doing a lot of tightening. That really stood out to me. And it stood out to Peter Schiff here as well, because he had mentioned this. Like, you're driving with 1 foot on the gas and 1 foot on the brake. And you see, that's kind of why like the crypto market is kind of like staying put where it's at right now. It's not really growing. It's not really doing anything. It's kind of just going up a little bit and then down a little bit, because the monetary policy is you got 1 foot on the gas and 1 foot on the brake. The interest rate cuts, that's gasoline. That's stepping on the accelerator. And then the quantitative tightening that's still ongoing, that's stepping on the brake. So Schiff questions the logic of doing both of those things at the same time. And also, we question where he says abundant versus ample. Like, that's a distinction without really giving us some clear meaning behind the distinction. And what Peter predicts is that quantitative tightening will soon end. And that's going to open the door for quantitative easing, which is going to fuel inflation and raise long-term rates. Or the long-term rates will go up first, and then they're going to have to do quantitative easing to bring them down. That will create a lot of inflation, and then rates will have to go back up here again even after they bring them down. When they do that, it's kind of like game over, like Fed's waving the white flag of surrender, saying, yeah, we really don't know what to do to get this thing under control. So we quit. We quit. Is kind of like the result here of that. And this is why you guys got to invest. You got to invest. Even if you think this bull market is all over, even though I showed you it never even began, if you think it's all over, well, I don't see how you get out of this here. I don't see how you sell your investments and you sit in cash and win that way, because the inflation that's coming is going to destroy that money. I wrote a Substack not too long ago. I'll show it to you here. Where did I put it? I wrote a Substack that explains this here, that even if you keep all of your money in cash, you're still not safe. Maybe that's not investing in a risky asset, but it's just as bad as investing as a money-losing asset. It'd be like investing in Enron. You're guaranteed to lose money, because hoarding cash is a guaranteed loss when you factor in inflation, like losing 10% a year. So this is not me trying to tell you what to do or give you any sort of financial advice. It's me saying this is why we invest, because if you don't, you still lose money. You still lose money when you don't invest. On that note, let's just play a little bit of little informative video right here. Then we come back, we're going to wrap up.
You're listening to a Reinvent Ideal live stream. The phrase reinvent ideal isn't just clever wordplay. It's a manifesto. For decades, society handed us a dusty old blueprint for life. Work 9 to 5, climb a corporate ladder, buy a house you can't afford, marry young, pump out kids, spend 40 years in a hamster wheel, and if you're lucky, retire at 65 with a gold watch and arthritis. That's the ideal we inherited, but it's a lie. A boomer-delivered illusion that made sense in 1970, But in today's world, it's a recipe for debt, burnout, and disappointment. Reinvent Ideal is the antidote. It's about rejecting the outdated script and designing a new one. A life where freedom, autonomy, and leverage replace status chasing and financial enslavement. Where your ideal isn't dictated by suburbia and social media, but what keeps you sane, sovereign, and alive. Instead of status symbols, we pursue rare and in-demand skills that buy independence. Instead of debt-fueled materialism, we choose minimalism, shedding liabilities and obligations. Instead of working to death, we embrace crypto and investments that multiply freedom instead of shrinking it. The new ideal isn't about fitting into someone else's mold. It's about building a life that maximizes your time, choices, and sovereignty. Reinvent Ideal is about giving yourself permission to redraw the map.
Alright, so in case you were curious about why is the channel named what it's named, that's the reason why here. So to wrap things up right here, if you got any questions, go ahead and throw them in the chat right now. But here's what I got to say to you guys about this. Still, the bull market has not yet begun. It's not. And I do think that we got a very difficult time ahead of us with September. I've been saying this all along. I mean, I did think that the rate cut is a step in the right direction, but it's not a big step. And more rate cuts coming. They are little steps on their own. They're not big steps. And I think what's really going to happen with these rate cuts is they're going to find, yeah, these rate cuts are not doing what they're supposed to do. They're not being effective. We got to turn on the money printer. I think that's how this plays out. When they do 2 more this year, and then they do 1 more next year, maybe 2, 3 more on top of that, that's when they got to turn on that money printer and do quantitative easing again. I think that is how it plays out. But it's going to take a while before that happens. And it will be hard. It will be difficult for us up until when that happens. You guys will know when the bull market is over, because that's when you're going to hear me give a speech where I just say, hey, don't let anybody know how rich you are. We give a very thorough speech here. And I'm going to make sure you know that it's the speech, because I'm going to say, hey, this is the speech you've been waiting for. When I give that, that's where I think I'm going to how to interpret me given that is when I am going to start dollar cost averaging out, me personally, myself. All right. That doesn't, maybe it's not the whole run is over because I can't call the top exactly. But that's me telling you, hey, I'm going to start DCAing out. All right. When I give you that speech, I'm nowhere close to giving that right now. Nowhere close to it, because this bull market is nowhere close to even beginning. I think that we still have a long wait ahead of us before that money printer gets turned on. What could make it happen sooner is if we get a recession. The last stream that I did, or one of the last streams I did like a scoreboard where I said, well, here's a point that says, yes, we are going into recession. Here's a point that says, no, we're not. And it was pretty split right down the middle, but it leaned more towards no recession than going into a recession. I might have to amend that, because here's something I saw on X here. I saw this earlier today here, and it has me thinking, well, maybe there is still a recession coming on. Here's what it is here. Take a look at this. There was this woman that was being arrested. This lady here, she was being arrested because she allegedly stole $3,000 worth of stuff from Target. Now, I don't know if this is real or not or anything. Man, that doesn't look like a woman that shops at Target to me. Like, when I think of like the type of woman that shops at Target, I think of a Karen or someone with a side shave and a septum piercing. No hate the side shaves, because I mean I got them too. But for me, it's like mainly out of ease of maintenance, because I hate wasting time on my appearance. But let me take a look at this here. This woman's being arrested because she stole from Target. Pretty good-looking woman, actually. Not bad. Yeah. But you want to know who's real good-looking? Take a look at the cop that's arresting her. Let's show her here. There was a woman cop that arrested her. They're walking her back to her car. There's the cop that's arresting her. What do you notice about the cop? What do you notice about this lady here? I'll tell you what I know is, like, she is a lot better looking than the other lady. She is a lot better looking than most women. This is in Naples, Florida, by the way. And in Naples, it's mostly old people. There's not a lot of young people. There's certainly not a lot of hot people down there either. But this woman right here, I mean, imagine she's got to be like under 30. Good-looking woman and everything. You do not see cops look that good-looking, typically. I'm not saying cops are ugly people, but here's what I am saying is that the pretty people typically don't work in law enforcement. They typically work in sales. That's where pretty people go to work, all right? I mean, for reasons that are quite obvious, why would you want to do a thankless, very difficult job like law enforcement when you're a good-looking person, when you're an exceptionally good-looking person? Why would you want to do a hard job that pays very little? Your life is on the line. You don't get, it's a thankless job. You can get into a lot of trouble easily if somebody just falsely accuses you of something, and it could really wreck your life and turn it upside down. You go into situations where you could get roughed up and everything. You think a pretty girl like this wants to get punched in the face? You think that they want to be chasing someone down and possibly getting into a fist fight when they have to use force to arrest someone? Now, this woman here that they're arresting, she came willingly, was very well behaved. Like, this is how you should behave if you're ever being arrested or anything. You'd be real nice about it, like this lady is. But and look at that. Look at her nails. You telling me like that's normal for a cop to have acrylic nails like that? That is not normal. I have not seen a lot of lady cops with acrylic nails. I have not seen a lot of lady cops that are good looking like that. Usually I see like a bunch of big, fat, ugly chicks that are cops. And I'm not hating on the cops here because I am a very pro-cop here and everything. So even if you're a big, fat, ugly chick that's a cop, I got nothing but love and respect for you. But this pretty young lady here is a cop. To me, you know what that says? What that says to me is that the economy is bad and something really bad is cooking. That's why a good-looking hot girl like this is doing a hard job that nobody wants. She could make a fortune, an absolute fortune, being a not even an OnlyFans model. Not even that. She could just make a fortune getting on YouTube and just talking about like conservative politics, or if she just did YouTubing about a man's hobby like fishing. Like there's a couple of girls actually that are in the fishing YouTube niche, and they make a fortune just by being hot girls in bikinis doing fishing. She could do that too. Why isn't she? Why isn't she? Probably because those opportunities have dried up. All right, down in Naples, you can make a fortune being a stripper. Ask me how I know. All right, but she's not doing that. That tells me that the money is all dried up. So I think that there is a very difficult time ahead of us, guys. I think something really bad is about to happen when a gorgeous woman like this is a cop, as opposed to being, I don't know, a salesperson at least, or making a fortune as a waitress, or making a fortune in something else, or just businesses in general. They want pretty women around. When I was at the branch in Fidelity, they wanted pretty women working up the front end in the lobby, or being the assistant to the financial advisors. Why isn't that happening? There's a branch down there in Naples. There's a bunch of them because lots of retired people down there in Naples. Why is she a cop instead of an assistant or a secretary or something like that? Why is she doing a hard job that nobody wants, where she could easily lose her life or get seriously injured? That makes no sense to me, other than maybe the economy is in trouble. And I'm going to show you how I know she could make a fortune as a stripper in Naples, because I was once a stripper. Yes, if you hadn't heard my story, well, back in 2012, life really sucked. I graduated with a useless degree in acting. The economy was crap. I couldn't find a job. I had to resort to stripping. And if you say, oh, you're just making that up to dramatize your story, well, then please answer me this here. If I'm making it up and I was never really a stripper, please explain to me, how in the holy heck was I ever able to do this? that's me being pretty rusty after being out of the game for like a good, 5 years? Yeah, a good 5 years being out of the game, but I can still spin on the pole just like that. So you go through difficult times in your life, yes, but they don't last. We got a very difficult time ahead of us with September still not over. We got a very difficult time ahead of us with Q4 of this year, I think. We'll have some good times, too, when those ETFs start getting approved. I think we'll have some good times there, too. But overall, nothing really good is happening until that money printer gets turned on. It's going to take a while. And if we hit a recession, which we very well could, you saw the scoreboard when I was doing that. It was very close. It was neck and neck. If we hit a recession, what's going to happen is a lot of people are going to think, oh yeah, there's no crypto bull market, or if there was one, it's all over now. A lot of people are going to think that because prices will go down. And a lot of people are going to get washed out, and they're going to end up buying back in at much higher prices later on. But it's going to be a very scary washout. I don't know what the prices are going to be, but I know it's going to be a very ugly red chart on most of these assets. It's going to be lots of ugly red candles on most of the charts. The stock market, they keep pointing at how overvalued it is. That thing would crash hard too when we get up to a recession. If we get that, it could very well happen. But I'm telling you, when that hits, when something like that happens, don't think of that as the end of the bull market or the end of this cycle and the start of a new one beginning with a bear market, because the bull run never got started. And if you pull out then, you will miss it as it gets started. Because when that recession hits, how does the Fed typically respond? When it's a big crisis like 2008 or like the pandemic, 2020, they call an emergency meeting, they bring the rates down to zero, and then they turn on the money printer. Either way, recession or not, that money printer will get turned on. But everything happens a lot faster when a very nasty recession hits or a very nasty economic crisis hits. Don't get washed out while all the action is happening. It's going to look pretty bad. It's going to suck. A lot of coins are going to go down dramatically. But when they turn that money printer back on, not only is it going to make back everything that it lost, but it's going to make a whole bunch on top of it. Just take a look at the stock market chart, the S&P 500 chart for the year 2020. In March, it went down 30%. Before the year was over, it not only gained the 30% it lost, it made back everything. It made back another 20% on top of it. It all turned out okay. And had you held on to it the whole damn time, had you not sold out, had you just held on to your investments, you would have came out 20% ahead. So that's all I've got to say here for today. And we'll be doing a lot more streaming in the future. And please don't forget to join us on Tuesdays at 7 p.m. for Hexagon University in Twitter Spaces with Tam Tam. Cairo out.
That is it for us today, you glorious degens. Smash that subscribe button to join the rebellion, and follow me on X at ReinventIdeal for more unfiltered truth bombs between live streams. And if this was your first time listening, head over to reinventideal.substack.com, because I have a free gift waiting for you there. If you become a free subscriber, you'll get a free copy of my book, Your Parents Were Wrong, Debunking and Replacing Outdated Advice, packed with the wisdom to outsmart the system. It's absolutely free to join, so no excuses. Grab it before the suits catch on. And remember, the bears get blocked right here and told to shut the FUD up. Until next time, this is Cairo Copeland, your millennial Moses.